Hello and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. So we just capped off a pretty historic year, but maybe not in the best of ways. The 60-40 portfolio, 60% equities, 40% bonds, diversified portfolio had one of its worst years in history. Bonds really performing poorly. And one of the reasons why, interest rates. The Fed put forth the fastest rate hike cycle in history. We'll talk a little bit about that. And then finally, consumers are a little bit over the honeymoon of the incredible amount of monetary and fiscal stimulus post-pandemic. Personal savings had skyrocketed. It has not only rolled over, but is down to an all-time low. So here's a look at a chart all the way back to 1970, all of the years in which the S&P 500 finished the respective calendar year negative, and the accompanying return of the Bloomberg US Ag Index, which is a US investment grade proxy for bonds. And then to the right is the classic 60-40 portfolio, 60% S&P 500, 40% fixed income in US investment grade, classic diversified balanced portfolio traditionally used by many investors. And one of the big findings, obviously, is this is the first year that we've had stocks and bonds both down at the same time during this period, obviously caused by that rapid interest rate environment. You can see down 16% for the full year for the 60-40 portfolio. That is second only to 2008. But the one big difference there, it wasn't the bond market that was dragging down the 60-40 portfolio. It was solely the big financial crisis, the great financial crisis, which obviously led to the largest bear market, one of the largest bear markets ever. Now, why did we see this? A lot of it is due to a chart that's not on the page, inflation reaching its highest level since the 70s. So several decades since we've ever experienced this inflation. I can spend an hour talking about why we experienced high inflation, but we did. And the Fed responded by increasing interest rates. It's hard to remember this, but we were at 0% to start 2022 for the Fed funds rate. It rapidly increased throughout the year. You can see all the way up to 4% by the end of the year. Fastest rate hike cycle in history. No doubt, no surprise that bonds had a tough year during that period, which have an inverse relationship to interest rates. And finally, the consumer starting to feel a little bit pinched. All right. This is the US personal savings rate per month that looks at what percentage of income are Americans saving, down to around 2.3%, right? This is an all-time low. Now, you can see how much it spiked during the pandemic when everyone was receiving extra federal payments. Some of those were still employed. People saved that, right? We saw housing was a big benefactor of that. Well, it's rolling over, and it's rolling over in a big way. Savings still relatively high, but the rate at which people are saving has plummeted, right below long-term averages. We're starting to see credit card balances inch up and a slowdown in housing. So there's no doubt consumer dynamics when it comes to the balance sheet, although I wouldn't say it's poor yet because they still have a lot of savings left over. They're starting to spend down that savings. They're starting to save next to nothing. Something to keep an eye on as we head toward 2023 here. And with that, I want to thank everyone for watching, but not before we talk about our fun, interesting factoid news story of the week. We've got the GOAT on here, and you're probably wondering why. Well, Lake Superior State University out of Michigan comes out annually. They ask surveys for ideas and reasons. They look to put a list of words that they believe should be banished from the vocabulary. They think it's overused or it's misused. And I just picked three. They've got a list of, I think, 10 or so. But number one is GOAT. Not the GOAT on the page here, but the all capitals GOAT acronym that means greatest of all time. They said it's not sensical. It's impossible to know what the greatest of all time is. So throw it out of there, they said. I don't think so. I think it's going to continue to be used. I think people like that a lot. It is what it is, right? I like that one myself. It is what it is, right? They say don't use that. That's bad. Okay. And finally, does that make sense? I don't know why they don't like that. What's wrong with does that make sense? If something doesn't make sense, you can ask someone, does that make sense? I don't know. So I think it's fine. But they have some fun with it. Amazing was another one. They said it's been misused. Not as many things are amazing as people say they are. So we'll keep an eye on that. We'll see if they have any impact. I have my doubts, but this is their official recommendation to get these words out of your vocabulary. With that, I want to thank everyone for watching, and I'll see you in a few weeks.